So if we move away from trading oil a lot in dollars, then why would these countries need the U.S. Treasury, as many U.S. Treasuries anymore? They would need the yuan, maybe they would need the ruble, who knows? But this is where we've been talking about this. We've been hearing about the speculation to move away from the dollar, but now it's actually starting to take place. It hasn't taken place yet, but it will probably this year.
Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping on every order, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 40,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with your SD Weekly Metals and Markets Wrap. And with us today is Steve St. Angelo from the SRSRockerReport.com. Steve, thank you so much for joining us today.
Yeah, thanks, Elijah, for inviting me, because this has been an interesting week. We've been seeing the doldrums in the precious metals for quite a while, but things have been changing. We've seen some nice movements, and there's a lot of geopolitical things going on, so there's a lot to talk about.
Definitely, especially with the precious metals over the last, it seems like since the beginning of July, precious metals have been moving higher. But especially in the last few days, you've talked about something very interesting happening in the silver market. You say, while interest and sentiment in the precious metals have been depressed compared to the preceding month, this all changed during the past few days. Can you expand on this?
Well, we saw a huge increase huge increase in U.S. Mint Eagle sales 2 days last week, and they were around 425,000 for 3 weeks, and that was going to be one of the lowest in August. That was going to be one of the lowest months of U.S. Mint sales to the authorized dealers for a long time, if we didn't see many more sales in August. But I think it was on the 28th and 29th of August, there were $200,000-$300,000 sales. Now, these were to the authorized dealers, but again, in just 2 days, the authorized dealers purchased 600,000 Silver Eagles, more than all of the last 3 weeks, actually almost 4 weeks, because there was almost the last part of August. And what was interesting too, Elijah, is we had this week also, we had China come out and announce that they're getting ready to start trading oil in the yuan. And this is nothing new. This has been out for 4 or 5 days now. But they're going to trade oil in yuan on their exchange in China. And to make it where other Middle Eastern countries or other countries would accept the yuan, they're going to back it by gold. So they can, these Middle Eastern countries or other countries, oil exporters or oil importers, if they want to trade use the yuan for their trade, they are protected by knowing that if they wanted to convert that yuan, they would get gold. So this is a huge step forward. And we've been listening about a gold-backed yuan or gold-backed yuan trade now in oil, which oil runs everything. So this is a very important step. So seeing what has happened in let's say the last week, there's been a bit of a trend change now in the precious metals. And I would say this new announcement by China to trade oil in yuan that is backed by gold, convertible to gold, this is a big step. And when they start doing that, we can talk about that more, but this is a big step, I think, in changing the U.S. dollar monopoly as the world reserve currency.
No, definitely. And I mean, we've talked about the petrodollar a lot on this channel and how countries could be moving away from the U.S. dollar. And it seems like, as you're saying with China, that's already happening as we speak. So how do you see this impacting the value of the dollar?
Well, we just heard today, I guess during there's a BRICS summit that's taking place in China, and you've got Russia there, India, and even now Russia Putin has come out and said that they're going to have what is known as a fair multipolar world, which means that they're going to bypass the U.S. dollar in oil trade. So when China starts trading oil on their exchange, and it's convertible into gold. And now Russia and other countries become involved. What that means is we have to remember, of all the foreign exchange reserves, basically it's central banks' savings account, their savings account. And 2/3 of the world's foreign exchange reserves are in U.S. Treasuries. So I believe it's 11.5 trillion, maybe 12 trillion of foreign exchange reserves in the world. So 2/3 of those are held in U.S. Treasuries. So if we move away from trading oil a lot in dollars, then why would these countries need the U.S. Treasury, as many U.S. Treasuries anymore? They would need the yuan, maybe they would need the ruble, who knows? But this is where we've been talking about this. We've been hearing about the speculation to move away from the dollar, but now it's actually starting to take place. It hasn't taken place yet, but it will probably this year. So what that means is you're going to see a liquidation of the Treasuries, because they're not going to need as many if the U.S. Treasury, unless the U.S. government comes out and says, well, we'll back our U.S. dollar with gold, I don't know if we have the gold to do that, but that might change things, but I don't see us doing that. So this is a much better deal for, let's say, other Middle East oil exporters, if they can get gold, if they want to convert the yuan in gold, they're getting too many yuan, or let's say the yuan starts to depreciate. Then they say, well, heck with that. Let's get the gold. Let's convert it to gold. So I think this is a very big deal, Elijah. And going forward, it's going to drastically impact the U.S. dollar, as well as how the U.S. dollar is going to trade in the United States. I think we're going to see inflation in the U.S.
And then, if we see inflation, how do you see that impacting the precious metal markets?
Before I get into that, let's discuss how it's going to impact the precious metals. Well, it's already impacted precious metals. And today, the U.S. dollar, and I think we had another interesting article came out on Zero Hedge today about the repo market snaps on the 10-year, and it's actually fallen considerably, the most in over 2 years. And so what did that do to the U.S. dollar index? The U.S. dollar index fell like 80 basis points during early trading today. And according to Clive Mond, who's he does a technical analysis, and I don't particularly follow technical analysis that much, but a lot of traders do. A lot of the markets are based on technical analysis. Well, his article that came out a week ago, it was about the looming, the death of the U.S. dollar reserve currency. He had a chart that showed that the U.S. dollar, its key support level was 92.5. Well, early this morning, the U.S. dollar, and I think it was trading at 91.60. It's almost a full 100 basis points below that key support level. And I believe the reason why we're starting to see the dollar really break apart has to do with this new news of this trading oil away from the U.S. dollar. Now, what that does to the precious metals? Well, the precious metals are the barometer of the dollar, because right now the dollar is still the world's reserve currency. And now we saw a huge move up today in gold. Gold was up $14. I saw silver was up 25 cents. But this is just the beginning stages. And when we start to see the dollar really decline, start to fall below 90, the index into the 80s, it can head down into the 70s, then we will start seeing a lot larger moves in the precious metals.
It seems like precious metals have been rising continuously for about 2 months. Do you think we're in an overbought territory right now?
Well, if we go by the COT report, and if you look at the COT report on gold and silver, and that's the commercial shorts compared to the speculative longs, I think about 7 weeks ago, maybe 8 weeks ago, it was the commercial shorts were at a low, and at a low in a long time, ever since the beginning of 2016, when we saw that big move up in the precious metals over the next 6 months. And let me remind you, that took place during we had a huge move up in gold and silver in the beginning of 2016, with a 2,000 point correction in the Dow, just a small 2,000 point correction, and now we've gone up even higher. I mean, it's gone up even higher. It was like 18,000 back then. Now it hit 22,000 a little while ago. So people say, well, if the Dow goes down, then the precious metals will follow with it. No, that didn't happen last year. The exact opposite happened. The Dow fell, and also in that quarter, Elijah, we had a record inflow of gold inflows into ETFs. Now, let's just disregard if the gold is in ETFs. What I look at is movements, because when you see a lot of movement into the gold ETF market, a lot of flows, that means the retail investor, the mainstream investor, is really concerned. So I don't care if the gold is in there, because most precious metal investors have physical. But the retail investor, when they get spooked, or when there's a lot of fear or uncertainty, when they move into the gold ETFs, that shows you something is really wrong. And that was actually the second highest quarterly flow since 2009, when the markets were crashing. The second highest, largest number of investors moving into gold ETFs, and that was the first quarter of 2016. So if we look at the COT report, and I'll answer your question this way, we are starting to see more and more commercial shorts. They, as the price of silver and gold go up, they continue to layer on the shorts. But at some point in time, when this U.S. dollar really starts to fall apart, either the banks are going to they're going to start to liquidate their shorts before, or they're going to get caught upside down. And then the price will just rise, and we will have what is known as the huge short covering rally, where they're going to have to buy back and lose a lot of money. And that's something we've been waiting for years and years. And at some point in time, if the banks continue to increase their shorts on this up and down price movement, and the dollar does start to lose its reserve currency status, then they're going to be in serious trouble. And that's when you can see some crazy moves in the precious metals. But yes, we're starting to see more and more shorts being added. But I don't know if it's a peak yet. It could still go on for several more weeks, a month.
So that's very interesting. It seems like you're saying instead of gold and silver being overbought, because there's so many shorts right now, it seems maybe almost oversold right now, even though it's been rising.
Yeah. Well, no, you're correct. When you asked me if it was overbought, when I say overbought, I'm going by the amount of commercial shorts, their amount of commercial short exposure. When they have a very low commercial short exposure, that usually suggests that the price of silver is also at a low. And then as their shorts increase, the price of silver and gold start to increase. And so, again, about 7-8 weeks ago, the commercials had a very low short position against silver. But now they've been adding shorts. And so in the last 7 weeks, it's been increasing. But they can continue to add more shorts as the price of silver goes higher. So is that overbought? Well, according to the COT report, it gets to a point when they get a peak of a high amount of silver shorts. Normally, then the silver is overbought, and then you see as they liquidate, the price comes down. But at some point in time, Elijah, as I mentioned, we're in a different market now. Now that we have China and Russia and other countries, especially China, announcing they're going to start trading oil, which is the number one energy commodity in the world. Without oil, nothing really runs. And so when they're going to start trading oil in Yuan backed by gold, it changes the whole dynamic now. So we could see commercial shorts that are in record high territory at some point in time. They cannot liquidate those and have the price fall anymore. They're going to have to cover. And so when they cover, they got to buy back, and the price will actually increase. So I don't know when that's going to happen, but I think we're going to start to see fireworks over the next 6 months, especially when they start trading oil in Yuan backed by gold.
Now, another thing this week that seems like it should be bullish for precious metals is Trump raising the debt ceiling. What is your perspective on that?
Well, rising debt is like a big lie. That's what it is. You can't go back. The only thing you can do is say a larger lie, because if you don't do that, then the whole thing falls apart. The whole system falls apart. or the lie that's based upon, the whole system will fall apart. So they have to increase the debt ceiling. It has to. And now, whether Trump is going to have trouble getting support to increase the debt ceiling, I don't know. If they shut it down for a while, there could be some, serious short-term volatility in the market. But I do believe they have to increase the debt ceiling level. When they increase the debt ceiling level, there's going to be more debt added to the system. And if interest rates continue to rise, we're paying $460 billion a year in an interest payment just to service that $20 trillion in debt that we have. Now, if interest rates continue to rise, as the Federal Reserve says they're going to do, or let's say the Federal Reserve is no longer ability to actually manipulate the markets by saying what the interest rate is, when the markets actually take over and say the real interest rate is 5 or 6%, well, that means a doubling of the actual annual interest payment, which would be over $1 trillion. That is a big number, and we can't afford that number. And we can't really afford the $500 billion interest payment. So we're borrowing money just to pay the interest payment and to fund everything. And so I do believe they're going to increase the debt ceiling. It's going to kind of maybe push things back a little bit longer, but this is starting to get out of hand, Elijah. And again, when China starts trading oil, when we start seeing oil being traded, then the current countries are going to have to start liquidating their US Treasury reserves to buy Yuan so they can actually trade oil in Yuan. And so we could start seeing now the US dollar index fall, and it is going to impact our deficits, our interest payment. And so I see it getting ugly in 2018.
Now, when you say you see this getting ugly in 2018, what kind of crisis do you see hitting us? Can you expand on that? I know you were recently on the Peak Prosperity podcast, and you said when the crisis hits, asset prices will fall 50 to 75%. Can you expand on that?
Yeah, and as many of your listeners who follow my work, my founding principle analysis is the energy. We can't do this interview unless we have electricity. You can't get to work unless you have, gasoline or diesel in your car. Manufacturing plants can't work unless there's natural gas generated electricity from these power plants or coal to power the manufacturing plant, the trucks that go up and down our interstate. That basically those are the warehouses now. There's not really any warehouses. They don't store many things today in stores like Walmart's. It's all being moved on the interstate. All that is run by energy. So people look at all, let's say, the vital signs, which is the U.S. dollar, the U.S. Treasury, the precious metal prices. Those are a big vital. But the underlying, when the vitals in a person, when their vital signs really go haywire and they go, oh, look at this, look at the blood pressure, look at the heart rate, look at these levels of the different chemical structure in the person's vital signs are all out of whack. Well, there's an underlying condition why that's happening. And we tend to focus on the vital signs, but the problem is the energy. And so let me tell you, the reason for the huge, I see a huge 50 to 75% collapse in asset prices, and the majority of they will be in stocks, bonds, and real estate. And this is where 99% of investors who are invested in the market, the majority are in these assets. Now, it's based on the energy. And let me tell you, Saudi Arabia, and which is based, that's where we started the petrodollar. So Saudi Arabia was the key country in our petrodollar system. It started in the early 70s. Well, Saudi Arabia is in big trouble. They continue to liquidate their foreign exchange reserves, and they've sold $250 billion of their foreign exchange reserves because the oil price that they get to fund their economy and their national economy has fallen considerably. It was $100 in 2014. The price of oil is now trading below $50, and I've been looking at the Saudi Arabia foreign exchange reserves. They've been continued to decline. They fell to a new low in May, but then in June they went up a little bit. Well, they just came out with the new data, and in July it fell even more. So they're continuing to liquidate their savings account because they're not making enough money with their oil to fund everything. So they're in big trouble. And I can give you a very important statistic. Saudi Arabia, they get a lot of their workers from Pakistan, a lot. And in last year, they imported 462,000 plus Pakistani workers to work in the oil fields. Basically, that's where they get a lot of their employment, from Pakistan. Well, the first half of this year, they only imported about 77,000. It's down 2/3. So they have cut their employment, let's say their outer employment that they use in their oil fields and their economy, they've cut it by 2/3 this year. That just goes to show you how bad of a situation Saudi Arabia is in. So I think Saudi Arabia is in big trouble. And so what that means, it's all based on the oil, Elijah. I see, and let me tell you, the U.S. shale oil industry is also in big trouble. There's so much information I can't even tell you. I could go on for a half an hour. It's a huge Ponzi scheme, and I will believe within the next 2-3 years, and it could be even sooner, we would start to see a real disintegration of the U.S. oil industry. Oil production is really going to decline because it's all being based on debt. And they can't even make their interest payments. Continental Resources didn't have enough money really to pay their interest payment in the last quarter. And let me tell you, their interest payment last year, just to pay their interest, was a third of $1 billion. That's what Continental Resources, and they're a big player in the back end. So when the oil starts to fall apart, and it brings down everything. Because here's what people don't realize, and I'll conclude this segment here. You have to burn energy to create economic activity that allows everything to be paid off, or dividends, or percentage of profits, or retirement accounts. You have to have burning energy, and especially growing energy, to continue running all this. Well, when the energy starts to really fall apart, then the real estate market is a Ponzi scheme. You can't make your mortgage payment. The whole real estate market collapses. Values will plummet. Stocks, they base their value of their stock price on net present value. So you have to burn energy in the future so they have earnings to keep up their stock price. Well, when that falls apart, then their stock price collapses. And then we have bonds. And bonds are the same thing, 10-year bond, 30-year bond, 5-year bond. It's all based upon paying things off in the future. So, yes, I see a 50 to 75% when things start to really fall apart in the U.S. and global oil industry, Elijah. I see a big drop-off. It'll kind of like hold there for a bit, and then it'll continue to drop off. And I do see a 50 to 75% collapse in the price of those stocks, bonds, and real estate.
So then what assets do you think won't fall during the coming crisis? And what is your perspective on where people should be positioned to survive financially?
Well, there's probably several assets that people could buy. When someone says, well, real estate, I'll buy real estate. Or no. Farmland, no. Commercial farmland, no. Warehouses, no. Commercial buildings, no. Real estate, no. Maybe very modestly priced, paid in full, inexpensive homes for rental. Yes, that may hold some value, but they're going to fall. Everything, all those major assets I said are going to fall. Where do you want to put your money? To me, gold and silver, keep it simple, stupid. They've been the store of wealth for 2,000 plus years. And the reason why they are different than a stock, bond, or real estate, when you own a gold coin or a silver coin, all that economic energy that went into produce that gold and silver coin has already been spent. It's not based upon net present value. Where a stock price, which is, let's say its earnings is 10 to 1, it's based upon burning energy. Gold and silver, if you own it, it's already stored in there. And there's very few high-quality store of wealth assets out there. And so there is, I believe, 330 trillion, Elijah, of global assets that are in the stock, bond, real estate, as well as insurance funds. when they start to fall apart, and when a percentage of those investors, when they start to realize, gosh, these prices are going to continue to fall. You only need a few trillion, 1 to 2 trillion of that to move into precious metals, and it makes the prices go silly. Just 1, 2 trillion. So that's how I see it. I don't know how much money will move into the precious metals when the prices really start to fall of those other assets. Some of them you won't be able to sell. The person who bought a $400,000 house today, that house will sit. They won't be able to get the money back on that. And then why would you want to buy that house if the energy starts to decline? Who wants to heat and cool that darn thing? It's going to cost a lot of money to heat and cool that thing. So a lot of these assets are going to be sunk. They're just going to sit there and they're going to rot. And so I do see this intelligent investors who are in the mainstream investments, when they start to wake up, and that small percentage that gets out before things really start to fall apart. Yes, I think we could see crazy prices in the precious metals.
So what about other assets such as like cryptocurrencies? Where do you see them going during this crisis?
That's another long answer. And up until the last 3-4 months, I listened to a lot of the assumptions on cryptocurrencies, that they're a Ponzi scheme and they're just they're speculation. But I have had correspondence with a gentleman who's done all the research on what it costs to produce a Bitcoin. And according to the energy and the miners, they're very expensive to purchase, as well as all the additional expenses. It's now costing close to $1,500 just to make one Bitcoin. So there is some kind of let's say basic value if you're going to use energy and all the capital that went into producing a Bitcoin. So there is kind of some floor. So I do see other investors, when things get rough, when the markets start to fall apart, I do see a lot more money moving into the cryptocurrencies. Now, I do believe a lot of these new tokens that are coming out, they're like penny stocks. I do believe the majority of them are like most mining shares. They'll never become mines, and so they probably won't be around in a few years. But I do believe a certain percentage of the Bitcoin, Ethereum, Litecoin, and several others, I do believe they'll still be around, and even new ones. So we will see funds moving into the cryptocurrency market. But when China announces that they're going to back their oil, not by Bitcoin, not by Ethereum, their Yuan, by gold. Gold and silver are still the key physical monetary assets to own, because gosh knows anything breaks down, in the electric grid, you can still use gold and silver. You can't use, it's very difficult to use Bitcoin when the electronic system has broken down. I'm not saying it will. So to me, the key assets to own are still gold and silver.
All right. Well, Steve St. Angelo, thank you so much for joining us today. Before we let you go, I was wondering if you could touch on something, how we are both in the independent media, and lately there's been what some people might call censorship of the independent media. YouTube has been, removing advertisements from some videos and making them not advertiser friendly and stuff like that, where it seems like there's this kind of censorship going on. Can you explain a little bit about that? And also, you're working with a company called the Commodity Ad Network, and I was wondering if you could tell us a little bit about that.
Yeah, there's been an orchestrated effort to kind of diminish the alternative media, as you call the independent media, the alternative media message. And this was a perfect example last week where Ron Paul's YouTube channel, and his YouTubes were marked as not ad friendly. So what that means is he no longer gets any revenue for that YouTube. Now, what he has to do, and this is not just happens to Ron Paul, he's just a well-known name in the alt media. It's happening to everybody. Sean at SGT Report, I've talked to a lot of people. It's happening to them. And so what they're doing is now what you can do, you can manually review it. So you send to Google and you manually review the YouTube, and then they'll come back later and say, okay, yes, it's fine. We'll allow it, but then you still lose the revenue from the point where it was off. And so this is one aspect. Now, Peter Froelich, who is the actual founder of the Commodity Ad Network, and actually right now we're having a pre-sale. It's pre-sale is going on. We're offering a 100% bonus. It's the CDX token that's going to run the whole Commodity Ad Network, and that goes until Saturday. So if anybody wants to participate, instead of getting 1,500 CDX tokens per one Ethereum, which it's based off of the Ethereum blockchain, from today until Saturday, they can get 3,000, 100% bonus. But what this Commodity Ad Network is designed to do, it's designed to be for the alt media. We're going to bring on 300 content creators, which is like my website, the SRS Rock Report, or Sean, SGT Report, or even Brother John. The list is increasing. What we want to do is bring on a 300 content creators by the beginning of January 2018, and 60 advertisers. And it's a 5-to-1 ratio. You want 5 websites to every one advertiser. And so doing this, we're going to offer the first 300 content creators, we're going to offer them a $1,000 sign-on bonus, and we're going to pay them at least 2 times what they're getting paid with the Google on AdSense. Now, here's the issue I want to get to, why this is important. We interviewed, Peter and I, the founder of Commodity Ad Network, and I'm like the marketing guy. We interviewed James Damore, who was the fired Google engineer. And he said in his interview, I asked him, I said, now the kind of censoring the YouTube, do you see Google going into AdSense, which are ads on websites? And he said, yes, it looks like the next logical move. So, Elijah, how do you kind of diminish or diminish the alternative message? You cut the funding to websites, because people are making money and they're spending a lot of time, and some people who have big websites, they're making a living doing this. So how do you cut the message? You cut them financially. So what we want to do with the Commodity Ad Network is allow alt websites, which are precious metals, talking about the too big to fail, energy companies, all these websites that are more geared toward the alternative independent media. We want them to come on board, and then the advertisers are actually going to be advertisers who would advertise in this specialized niche market. So it's a much win for both the content creator. They'll be getting paid more, and this is important to realize too. The advertiser has to understand, like a precious metal advertiser, if the goal is to diminish the alt media message and websites start to close down, what happens to precious metal sales? So it's going to impact the advertiser, because the advertiser for precious metals isn't advertising really on a mainstream media or let's say website, because people don't really know about it. They're mainly focused on the alternative and new viewers, new followers who are coming to the alternative websites. So it's in the best interest for not only the content creator, the followers who read all this information, as well as the advertisers. It benefits everybody to look at and consider the Commodity Ad Network. And again, I wanted to say that one last thing is important. Google is actually tracking everybody, all their IP addresses. When you click on an ad, you'll notice you continue to see it when you go to different sites that are so different. And all behaviors are kind of they're recorded and they're used for whatever reasons. The Commodity Ad Network is 100% private. We want they're searching, they're clicking, that's all private. There's no reason to record that and use that. There's no reason for that. We don't believe that at all. So we're just trying to provide an alternative to the large ad network that's underpaying people and will continue to cut their revenue. So again, I just wanted to end with this because we think it's important to continue to put out the alt message. And if we're going to see alt websites being hurt financially, then the message is going to start to decrease. And so this is a good reason to go to the commodityadnetwork.com. There's the Commodity Ad Network newsletter if people want to find out about it. And also, if you want to participate in the pre-sale, there's going to be the ICO starts on September 9th. It runs for the whole month. If you want to get that 100% bonus, you can go to the website where it says the pre-sale, and you can participate.
All right. Well, Steve St. Angelo, once again, thank you so much for joining us today. Before we let you go, did you want to remind our viewers where they can find your work and any last thoughts you had?
Yeah, my work is at the SRSRockerReport.com. I put out 2 to 3 articles a week. I will continue focusing on the energy. There's a lot of bad news coming, and that's going to impact everything, lifestyles, asset prices going forward, and it's going to do it in a big way, in a quick way. So if you want to go to the SRS Rocker Report, check out my new articles, I would advise you to do that. Also, I am associated with the Commodity Ed Network as the marketing person because I know so many people in the industry. So you want to check out the commodityednetwork.com and see how that's changing. You can subscribe to the newsletter, and we look forward to anybody who wants to contact us. So I do appreciate your time on with the interview, Elijah.
Once again, Steve St. Angelo, thank you so much for joining us here on the SD Weekly Metals and Markets Wrap.
Thank you.